Also, let's kick things off with that weaker than expected jobs report. The Fed has been touting the strength of the labor market, using it to bolster their higher for longer rate argument. So how might this report affect the Fed's monetary policy pathway moving forward? Here with more, we've got Yahoo Finance's Jennifer Schonberger. Hey, Jen.
Good morning, Brad. The job market clearly cooling in the month of April to kick off the second quarter, with non-farm payrolls coming in much lower than expected at 175,000 for the month versus expectations of 241,000. And in particular, wage growth coming in below expectations at 3.9% versus 4% expectations. All of this underscoring that the job market is cooling and coming back into better balance, exactly what the Federal Reserve has been waiting to see. Specifically on wage growth, that clocked in at 3.9%. Fed Chair Powell said on Wednesday that while the Fed does not target wage growth would probably need to tick down a bit to see sustainable wage growth. If we look at the numbers, 3.5% wage growth would probably be more sustainable in terms of what the Fed's targeting for 2% inflation. So today we're at 3.9, so certainly some encouragement there. Now, while the job market is coming back into better balance, it is the inflation side of the mandate that the Fed is bulking at. Powell said on Wednesday that he believes the job market can continue to move and to grow in a strong manner, and inflation could continue coming down. Take a listen to what he said.
Remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. I wouldn't rule out that something like that can't continue. I don't like to say that either either growth or a strong labor market in and of itself would automatically create problems on inflation.
Powell said he believes that the job market can continue to outperform, as you heard just there, with inflation coming down. He doesn't think that we would need to see weakness in the job market or the economy necessarily for inflation to come back down. But today's report offering some hope to the Fed that perhaps we could see some gentle cooling in the job market. We'll see what this means for inflation going forward here in the second quarter.